the stock that we're talking about, and Raman from Chennai wants to know whether it can be bought at the current market price.
Yeah, I think, Alex, I think this is one company which is a specialty chemical company, and I think they are now getting into some specialty chemical product which caters largely to the paint sector and which is going to be an import substitute. So I would believe that if the investor has got a 12 to 15 month kind of time horizon, definitely one could look at buying into the company even at the current levels. And most importantly, if you look at the quarter one numbers have been very solid. Revenue has been up by almost 22%. Operating EBITDA margins are close to 17-18%, and the company has given a decent growth commentary in the quarter one after the quarter one result. So I think one could look at a price of 175, 180 here, but definitely keep a time frame of at least 12 to 15 months.
Right, this next one is from Mr. Rajagopalan, and he's bought Tata Steel long products at a price of 700 rupees per share. Now he wants to know whether he should average at this point in time, and he's happy to hold on to this counter for the next 3 years. So he wants to know what should he do with Tata Steel long products. Do you track this one, Avinash, by any chance? And what should Rajagopalan do with his holding?
Yeah, I think my sense is that in the very near term, the stock could face a little bit of volatility because steel prices have corrected from their peaks. China buying has not yet resumed in a big way. So I would believe that, if he has a 2-year view, I think he should continue to hold on, because considering the fact that Tata Long Products has got a very strong correlation to the main Tata Steel share, and most importantly, its business model is quite healthy. He could expect a decent risk reward if he can keep a time frame of at least, a couple of years. Steel prices have not corrected sharply to the extent that they have been making losses, but I think going forward, hopefully once the second quarter numbers are out and we get a kind of a proper direction on the steel price front, you could see a further re-rating on the stock. So I think patience would be the key, and I think you should hold on for a time frame of at least 18 to 24 months. Yeah, I think, first of all, Alex, you must understand that Polyplex promoters have already sounded that they are looking out for a strategic investor, and in the very near term, they could, in fact, exit from the business completely if they get a decent premium. Most importantly, this is one company which is quite surprising because they give dividends every quarter, and the dividends have been fairly healthy. So I would believe that, if the investor has a time frame of at least 12 to 18 months, they are market leaders in, polyester packaging kind of films. They have a unit not only in India but in Asian countries like Thailand, which gives them global access to several global customers. So I think definitely over the longer term, if somebody has a time frame of at least 12 to 18 months, one can definitely start nibbling at the current level, but the time frame has to be decent, longer term, because in the short term the stock has already moved up quite significantly. Yeah, I think from a longer term perspective, TTK Healthcare can add a lot of value, to the investor's portfolio, provided, the time frame is slightly medium to long term. The company has a very good, product portfolio, has been showing a very decent track record in terms of top line profitability and the ROE numbers. And I would not be surprised that going forward, this is a branded play and not a purely FMCG company, but definitely the kind of products they cater obviously get a decent amount of pricing power. So I would suggest that, keeping a time frame of at least 1.5 to 2 years, one could possibly accumulate at these levels, but keep a time frame of at least 1.5 to 2 years for a decent risk reward, from the current odd levels. Yeah, exactly, Keril. I think, diagnostic space is going to see a lot of price competition, and we have seen not only now existing players, offering very competitive rates, new entrants like, Tata's, Adani's, these groups are also interested in entering the diagnostic space area. So, my suggestion to the investor would be that, this is one stock where possibly one could see a lot of pricing pressure, a lot of competition eating into their margins. So it would be a wise idea to wait for a couple of quarters, because despite the fact that there's a large unorganized sector which most of these organized sector players are trying to eat into, price competition amongst the listed space is going to increase quite dramatically. So Dr. Lajpat is definitely a good choice, but probably I would wait for a couple of quarters before I make a fresh entry here, considering the fact that the second and third quarter is also going to be extremely challenging. As far as other players in the sector are concerned, I think our preferred choice would be Metropolis, which is the market leader and which has got a very strong B2C kind of model. So margins are significantly better here. So I think it's better to wait for some time rather than jumping the gun now, because as rightly said by you, the price competition is getting more and more fierce. And that means that the re-rating of these companies would take a slightly longer term time, maybe for the next 3 to 6 months, and then thereafter one could start picking and choosing the stocks, for a long term kind of time frame. I think my guess is, for Akasa or for Jet Airways to regain market share in a very competitive space is not going to be an easy affair. And I agree with you that Akasa is definitely going to be a very prominent airlines in the economy kind of space. But as far as Jet Airways is concerned, we clearly don't know what's the kind of timeline when this airline actually gets reinstated in the aviation sector. For the near term, I don't think there are going to be any challenges because IndiGo controls almost 50% of the market and it is unlikely to lose significant market share in the near term. But yes, longer term, definitely it's going to eat into their market share. Pricing pressure might look a little more scary over the next, say, year or two. And after that, only one could take a call as to whether IndiGo could really face the competitive heat. Because clearly, I think, after Jet, the market was actually, left with a very big vacuum, and that vacuum was actually capitalized by IndiGo. So it's a matter of time, Alex, but I don't think in the short term any such kind of negative changes could come in for IndiGo. So till that time, I think you could hold on to IndiGo. The other two airlines, Jet as well as Akasa, are privately owned. So clearly, IndiGo is the only aviation play where possibly one could put your money and ride the boom. Obviously in the longer term. I think, Cheryl, you're right that there are a lot of news flows, which are coming for Yes Bank. But what is important for investors to note is that even as of now, the asset quality continues to remain very strongly elevated around 15-16%, which is very high for any bank. And I think unless and until these asset, quality levels do not come down to single-digit levels, it's going to be an Herculean task. In fact, the bank has also made an announcement or is planning to make an announcement for further capital raising because it expects its capital adequacy ratio to be inadequate. So, one could expect a further dilution in the book value, and considering the price of 15-16 rupees, I would not be surprised that, the price which possibly they could further dilute equity could not be more than, say, 10 to 12 rupees. So, the book value is unlikely to increase in a significant manner, and that's not good for the stock. Most importantly, it would take at least 2 to 3 years before the balance sheet of Yes Bank is completely repaired, and we could see ROA levels of roughly about 2.5 to 3%, return on equity of 14-15%, which are very important parameters for banks. So I would suggest that this is not a long-term share as of now. Considering that the balance sheet is fractured, they would be diluting their book value further. So I think it's better to sell on any rise. I think there are many good banks like ICICI Bank and Axis Bank which could offer a very decent upside over the next, say, 12 to 18 months, because in the banking sector the size of the balance sheet and obviously the diversity of the income stream is very important, which Yes Bank does not have as of now. Yeah, I think, Cheryl, my sense is, I think, the kind of time frame the investor has asked is pretty, small. But longer term, if investor is willing to put 6 to 12 months, then I think, companies like Cummins India, typically, Mahindra and Mahindra, I think these could be decent bets in the current market, considering the fact that, the tailwinds for both these companies is extremely strong. Cummins is going to benefit from an infrastructure revival, plus, it's an MNC engineering company. Mahindra and Mahindra, as everyone is aware, is within the auto space. I think the numbers which have been coming out, especially on new product launches, have been extremely strong. I would suggest that if the market corrects and if the index offers an opportunity for these stocks coming down, then that would be a good opportunity to accumulate, because eventually when the market recovers, these kind of quality stocks would definitely bounce back smartly. See, I think clearly Sequent Scientific has disappointed, the markets, from the Q1 numbers. And I think despite the fact that it's got a very rich product portfolio in the animal healthcare business, I would believe that, the problem the company is facing is because of, global kind of headwinds, especially from currency pressure and demand kind of conditions. So I think if the investor has got a very long-term view of at least, say, 1 to 2 years, then only one could look at this stock, because the stock has corrected sharply from higher levels. And I think despite the fact that business is robust, in the short term, some challenges would continue. So I think, if the investor has a fairly long time frame, then he can obviously hold on or make a fresh entry. But definitely in the very near term, the stock price is unlikely to move up in a hurry. Only an investor with a 1 to 2 year view can accumulate, and that too taking a long term horizon in mind. Yeah, I think as far as dividends are concerned, Alex, this is definitely a good dividend-paying company and offers a good dividend yield. I would believe that if the investor is looking at building a good dividend yield kind of portfolio stocks, then I think this should be part of that portfolio. Considering the fact that earnings have been steady, profits have been also growing at a steady pace. So I think unlikely that a very strong capital upside could come in from this business. But yes, from a dividend yield point of view, this could definitely give a decent yield. If one were investing in fixed instruments like FDs, this would definitely offer a better risk reward, for those kind of investors. So better to hold, I think, if you've got a long-term view in mind, because in the near term, we don't expect a very dramatic increase, but yes, longer term, definitely there could be a lot of value here. Cheryl, I think first of all, the kind of product this company makes, it's a commodity product, and it's very difficult to predict how the commodity will fare in the next 10 years, because as everyone is aware, commodities go through, peaks and bottoms. So currently, I would believe that, he should not be in a hurry, because despite the fact that there are only two companies in India, Graphite India and HEG, which make graphite electrodes for the steel sector, I think overall prices have come down. If we see the numbers of Graphite India and HEG in the first quarter, numbers have been more or less mixed, and I think the outlook also is pretty cautious, because until and unless steel prices don't pick up, we are unlikely to see record profitability levels of the previous years coming for Graphite India. So I would say that please wait for some time, wait for at least the second and the third quarter numbers, and then take a call. But definitely this is not a stock for the next 10 years, because commodity stocks normally peak out after every 2 to 3 years. So that's a factor which I think the investor should keep in mind. Alex, I think we should definitely book out some profits, because considering that he's bought it at 5 rupees and the stock is now around 300 odd rupees. So I think the first thing he should do is at least ensure that 30 to 40% of his holding he could encash, and probably switch into some other emerging growth sectors like capital goods, autos, auto components. Prima facie, the company has been doing well in the packaging space, and I think despite the fact that it's not a very large player, profitability has been pretty decent. So I think the rest of the quantity he can hold on. But when you have such kind of margin of safety and such ridiculously low purchase price levels, then it makes eminent sense to actually book out, because these are all semi-commodity kind of intensive sectors, and these sectors play in a cycle. So once the cycle changes, the price could dramatically correct also. So I think he should make the best of it and book 50%, and the rest stock he can hold on, considering that the numbers, at least since last 12 months and the quarter one of this year, have been pretty encouraging. I think Alex, ICICI Bank can be definitely added even at the current levels and on any decent market correction. Most importantly, ICICI Bank is one of the best positioned private sector banks in terms of their asset quality, in terms of their loan book growth. And the core business is now getting ready to be growing at a very decent pace. Plus, all their subsidiaries, including the broking subsidiary, the asset management subsidiary, the general insurance and the life insurance subsidiaries, are all doing exceedingly well, and that would further add up to the consolidated profits going forward. So I think he could expect a price of around 1,050, 1,100 if he can hold on for the next 12 to 18 months. So definitely banking as a sector should do well, and ICICI Bank is very well positioned.